Bitcoin finally got the buyer signal investors were waiting for. US spot Bitcoin ETFs turned positive again on Friday, taking in $90.4 million after 2 straight days of outflows. But before that demand could prove itself, a fresh US-Iran escalation put the Strait of Hormuz back at the center of global risk. So the question is no longer simply who bought Bitcoin, it is whether those buyers stay when real pressure arrives. BlackRock's IBIT accounted for $86.8 million of Friday's inflow, while HODL added $3.6 million. That is real demand, but it is still only one session. The sequence matters more than the headline. Total ETF flows were negative $84.9 million on Wednesday, negative $95.3 million on Thursday, and then positive $90.4 million on Friday. That tells us buyers returned, but it does not tell us they have become consistent. Bitcoin is now trading near $64,000 after moving between roughly $63,600 and $64,400 during the current session. Holding that area while geopolitical headlines worsen is notable, but this is still weekend trading, while US equities, Treasury yields, the dollar, and most oil futures have not delivered their full reopening response. The Strait of Hormuz matters because an energy shock can move quickly into inflation expectations, bond yields, the dollar, and overall financial conditions. Those variables influence how much liquidity investors are willing to place into risk assets, including Bitcoin and technology stocks. For the calm metrics, this is the key contradiction. Price looks resilient, but cross-asset confirmation is still missing. The first confirmation signal is Bitcoin defending the $63,000 area and then holding above the weekend high near $64,400. The second is another positive ETF session on Monday. The third is price strength supported by real spot demand, not only by more leverage. The invalidation is equally clear. If Bitcoin loses 63,000 as traditional markets reopen, if Monday's ETF flow turns negative again, or if a stronger oil and yield shock tightens financial conditions, Friday's inflow may have been only a temporary flicker. That would not automatically end the broader recovery, but it would weaken the claim that institutional conviction has returned. Price is the surface. Liquidity is the message. Friday showed that buyers were willing to step back in, but the next 24 hours will show whether they are willing to defend that position. Watch the futures reopening. Bitcoin's response around 63,000 to 64,400 and the next ETF print.